What if the government literally couldn't print money? It's a simple question, right? But the answer is, well, it's shocking. It leads us down a rabbit hole to an alternate America, a world so different from the one we know today, it's almost unrecognizable.
Just think about that for a second. Every single dollar the government spends, every bill in circulation, would have to be tied to an actual chunk of gold sitting in a vault somewhere. Now, for a long time, that wasn't some fantasy world. It was reality. And back in 1971, we hit a massive fork in the road that decided our fate forever. So picture this. It's a quiet Sunday night. President Richard Nixon gets on national television, and with just a few sentences, he basically shatters the foundation of the entire global economy. The US dollar, the anchor holding everything together, was suddenly cut loose.
I mean, we're talking less than 10 minutes. No vote, no debate. Nixon just ends the system that had run global finance for a quarter of a century. He fundamentally changed the very nature of money itself, and the world has never, ever been the same.
So to really get a grip on the world we lost, we've got to first understand the system that Nixon broke. Why did it even exist? And more importantly, what went so spectacularly wrong?
Okay, so let's rewind a bit. After World War II, America was the undisputed economic giant. We held something like 2/3 of all the world's gold. So everyone gets together at this big conference in Bretton Woods, New Hampshire, and they make a deal. The US dollar will be the center of the financial universe.
You can think of it like a giant pyramid of trust. It was the engine that kept everything stable. At the top, you had currencies like the British pound or the French franc, and they were all tied to the US dollar. And the dollar, at the very bottom of it all, was tied to the real stuff, physical gold. It was a promise of discipline.
And this was the magic number. The United States gave its word to the entire world. You can bring us $35 and we will give you 1 ounce of gold. Anytime, no questions asked. That promise was the bedrock of the whole system.
And for a lot of people in America, this system created a true golden age. The middle class grew like never before. The American dream felt real, tangible. But all of this prosperity was built on that one promise, that golden anchor holding spending in check. And, well, that promise was about to be broken.
The trouble started when Washington began spending way more money than it had. You had the Vietnam War costing a fortune, and President Johnson's huge Great Society programs. Instead of making the tough political call to raise taxes, the government just started printing more money, making every dollar out there worth a little bit less.
Now, other countries, especially France, saw this flood of new dollars and they got nervous. They realized the US was basically exporting its inflation problem to the rest of the world. So, they started calling our bluff. They showed up and said, "We'll take our gold now, please." Pretty soon, everybody wanted their gold. Fort Knox was literally being drained.
This backed Nixon into a corner with two terrible options. Option A was discipline. Slam the brakes on the economy, slash government spending, and force the country into a painful recession to restore faith in the dollar. Option B was to just default, to walk away from the promise. He chose option B.
But what if he hadn't? What if a different voice won the argument in the White House that weekend? Let's take a walk down that other path, the road not taken.
So in our world, Nixon took the path of least resistance. But in this alternate timeline, he chooses discipline. He grits his teeth, holds the line, and keeps the gold window open. And instantly, the world becomes a very, very different place.
The first consequence, the first shockwave, would have been immediate and incredibly painful. America would have been forced to live within its means, like overnight.
And here is the crucial trade-off. Our timeline gave us the 1970s, a miserable lost decade of stagflation that just wiped out people's savings. In the alternate timeline, that inflation never happens. But instead, you get all the pain up front, and it's sharp. We're talking a brutal, deep recession. Millions would have lost their jobs as the government is forced to make agonizing cuts to defend the dollar.
Okay, next up, shockwave number 2, the 1973 oil crisis. In our world, it was a complete catastrophe. But in a world still chained to gold, the response would have been completely different. See, without the ability to just print money to pay for crazy expensive foreign oil, the US would have been forced to get serious about energy independence out of sheer necessity. This would have meant a massive, immediate push into nuclear power, aggressive domestic drilling, and maybe even early investments in renewables, a full decade ahead of schedule. The next shockwave, this difference between their world and ours, well, it's maybe the biggest one of all. And it has to do with something we've all just accepted as normal: government debt.
And this visual just says it all, doesn't it? In a world where you can't just hit print on new money, the government is forced to live within its means. That would probably mean lower taxes, a smaller government, and a more stable economy. But, and this is a big but, it also means you have way less flexibility to respond to major crises.
The US dollar's role as the absolute king of global currencies? Yeah, that would have evolved very differently too.
In this alternate reality, the dollar would still be a big deal, for sure, but it wouldn't be the only game in town. You'd see other super disciplined economies like Germany and Japan rise to become major players way faster. This would probably mean more competition, but also more stability, with the global economy being far less dependent on every little decision made in Washington.
And the final shockwave hits an industry that has come to dominate our modern world: finance.
This is huge. In a world without a fire hose of easy money, the crazy excesses of Wall Street would have been seriously curbed. The kind of reckless speculation and mountains of debt that led directly to the 2008 financial crisis, it's really hard to see how that could have ever happened. It might have been completely impossible.
So, let's just step back and look at the world we've just built. It sounds pretty good, doesn't it?
It's really easy to look at this alternate America and see some kind of utopia. A world without runaway inflation, without a crushing national debt, without catastrophic financial crises and housing bubbles. But as we're about to see, this kind of stability came at a steep, steep price.
Because that discipline, that stability, it came at a cost that might just change how you see the messy world we actually live in. A world that can't borrow and can't print might also be a world that grows much, much slower. A world with higher unemployment, with less power to respond to a natural disaster or a pandemic. So the final question is, what was the real price of that golden discipline? And would any of us have actually been willing to pay it? Maybe the world we have with all its flaws is the one we chose after all.
Part 2. And let's be super clear here, sticking with the gold standard isn't some minor policy tweak. We're talking about a fundamental rewrite of, well, everything.
Yeah, this isn't just about changing how money works. It's about literally rewiring civilization itself. Our economy, our culture, our foreign policy, even the phone in your pocket. All of it gets ripped out and rebuilt from scratch. Okay, so let's dive right into the first major ripple effect. You could call it the golden cage. It's a world that runs on brutal, unforgiving economic discipline. But, and this is key, the wealth people build is actually real. This slide nails the difference perfectly. See, in our world, when things go bad, the government tries for these soft landings. But what we really get are these long, miserable debt hangovers and inflation that just won't quit. In the gold standard world, recessions are savage. They hit like a lightning strike, fast and violent. But when they're over, they are over. The system just purges all the bad bets and resets. Clean. But that discipline comes at a staggering human cost. I mean, without a monetary safety net, unemployment spikes are absolutely horrifying. In this alternate 1970s, you're looking at 12%, easy. And in a major crisis, something like our 2008, unemployment could briefly hit 25%. We're talking Great Depression levels of pain. It's intense, and it's immediate. But here it is. Here's the profound trade-off for all that pain. Just look at what happens to your money. In our world, inflation is like this constant parasite eating away at your savings, which is why the savings rate has totally collapsed. In the gold standard world, the dollar is solid. It holds its value. So people save, and families actually accumulate real, tangible wealth that isn't being silently stolen from them every single year. And it all comes down to one simple, absolutely unforgiving rule. There are no bailouts. There's no magical money printing, what we call quantitative easing today. The whole concept of a bank or a company being too big to fail is just laughable. If you fail, you fail. The end. Now, this kind of harsh economic reality, it doesn't just stay in boardrooms and on spreadsheets. It completely changes the way people live their lives. It leads to the end of debt culture as we know it, creating what you could probably call a more sober civilization. And it's like a cultural chain reaction, right? First, since money is actually worth something, credit becomes really rare and super expensive. That leads directly to step 2. Being in debt isn't a lifestyle choice anymore. It's seen as a mark of failure. And the final result? That whole cultural identity of the American consumer, built on credit cards and car loans, it just never really happens. So think about it.
The wild, debt-fueled Wall Street of the 80s, the dot-com bubble, the explosion of McMansions, all of that cultural excess is just dramatically toned down because the monetary system itself is constantly whispering in your ear, you cannot spend what you do not have.
Okay, and this is where it starts getting really weird. This leads to some of the most surprising consequences of all, creating a smaller, denser America. The actual demographics of the country, who gets born, and where they end up living are totally different.
Get this, in this alternate world, the US population by 2025 is somewhere between 20 to 30 million people smaller. How? Well, without an economy juiced up on cheap credit, families start later, fertility rates are lower, and the US isn't the same kind of economic magnet for immigration.
And a massive piece of that puzzle is where people live. I mean, the classic American suburb was pretty much built on the back of cheap, government-guaranteed 30-year mortgages. And guess what? Those mortgages only really work with an inflationary dollar. You take that away, and that huge suburban boom of the 70s and 80s, it just doesn't happen on that kind of scale.
But the consequences go even deeper, and honestly, they lead to some of the most counterintuitive outcomes you could possibly imagine. A world with forced environmental conservation and a sharply limited American empire.
So what do you think is the single most ironic, most stunningly unexpected side effect of sticking to a hard money policy like the gold standard?
This. It might have accidentally created the world's greenest energy system. No, seriously. When the 1973 oil crisis hits, there's no money printing machine to cushion the blow. The US faces a simple choice: conserve or collapse. So they go all in on nuclear power and impose strict fuel standards, not because they suddenly became environmentalists, but out of pure economic necessity. The incredible result, a carbon-neutral energy grid by 2005. Wild.
And that same fiscal discipline totally reshapes foreign policy. The US military runs on debt. Without the ability to fund wars on a credit card, the Vietnam War ends in '72, not just because of protests, but because Congress literally cannot pay for it without insane tax hikes. The Reagan arms race in the 80s never happens. You can't out-borrow the USSR if you can't borrow. And the world that comes out of that is way more multipolar. American power is still real, but it's limited. Now, this less globalized, less expansive America would also have a completely different relationship with technology. A world tied to gold creates a slower, steadier path for innovation and a completely different Silicon Valley. Think about it. Our Silicon Valley was built on a flood of cheap, almost free venture capital. That's what lets startups burn billions for years without making a dime. In a gold standard world, that capital is scarce and expensive, so the whole grow at all costs model, it vanishes. Startups have to be profitable, and they have to be profitable fast. That means no speculative dot-com bubble and crash. Tech still moves forward, just slower and more sustainably. And this is where it gets really personal. The tech giants that define our lives, Amazon, Google, Facebook, they just don't exist in the way we know them. Their entire empires were built on mountains of cheap cash that wouldn't have been there. And without them, the whole surveillance economy, the business model of harvesting our attention and our data, it was never even born. And that changes everything. It changes what it means to be a human being in the modern world. The way we connect with each other, the way we get information, the very way we think. It's all completely different. So what are you left with? A world that's more stable, maybe more sober, where your wealth is real. But it's also less dynamic, less global, and technologically years behind. A world without social media. A world without the American empire as we've known it. Just think about that. Part 3. Let's jump into two different realities, two potential futures that all hinged on a single decision made over 50 years ago. One is the world we're all living in right now. The other, well, that's something else entirely. So just imagine this for a second. It's 2025. Your savings account hasn't been eaten alive by inflation. The national debt is actually manageable. And that massive 2008 financial crisis that just wrecked everything and wiped out trillions in wealth, yeah, it never happened. Now, this isn't some fantasy. It's a parallel timeline, an alternate history. And here's the twist. It's both better and far, far worse than you can possibly imagine. But of course, that's not our world. We live in the reality that was created by one fateful decision back in 1971. So let's take a look at how we got here. It all kicked off on August 15th, 1971. President Nixon got on TV and announced a temporary measure cutting the US dollar's link to gold. Well, temporary became permanent, and boom, it unleashed 50 years of the money printers going wild. And this led to huge shocks, like the Great Recession of 2008, and has fueled a national debt that has just exploded into the trillions. And that exploding debt has brought us here, $35 trillion. I mean, just let that number sink in. To give you some perspective, back in 1971, our national debt was around $400 billion. The scale of this change is just staggering. So what does that mean for you? For your wallet? Well, since 1971, the US dollar has lost 87% of its purchasing power. Think about that. The money your grandparents carefully saved buys just a tiny fraction of what it once did. And we can't forget those huge, sudden shocks to the system. The 2008 financial crisis wasn't just some headline on the news. It vaporized $13 trillion in household wealth. Gone, almost overnight. And the thing is, these aren't just abstract numbers on a screen. They have real, painful consequences. We're talking about a shrinking middle class, housing that feels completely out of reach for a whole generation, a college degree that comes with what feels like a life sentence of debt, and retirement. It feels less like a guarantee and more like a total gamble. This is the reality that Decision built. Okay, now let's step into that other timeline, the one where the dollar stayed tied to gold. And let me tell you, it was not an easy path. We're going to start in a really difficult year, 1978. In this other world, the 1970s were just brutal. You see, the economy had to adjust, but without the easy out of just printing more money. So unemployment? It shot up to almost 12%. The political fallout was massive. But, and this is a big but, look at that other number. Inflation is just 1.3%. Your savings are actually safe. The foundation is stable, even if the transition is agonizing. And this is what that stability means for a regular person. Let's meet James Kowalski, a factory worker in this timeline. He isn't rich, not by a long shot, but he is secure. He owns his car, paid in cash, no credit card debt, and that $11,000 in his savings account, it's actually worth $11,000. His hard work translates directly into real, stable wealth. So what does this world look like in the long run? Let's jump ahead to 2025 in this gold standard reality and see how it builds into a completely different kind of society. The differences are profound. The federal government is way smaller, about 40% smaller, because it can't just print cash to fund its ambitions. Those trillion-dollar wars? Fiscally impossible. Wall Street is a service industry, not the casino at the center of the economic universe. The complex financial weapons that blew up our world in 2008, they were never even invented. Even the tech world is different. Companies have to actually be profitable, not just exist on venture capital to capture your attention. And all those big systemic changes, they ripple all the way down into daily life. You know, without that flood of easy money fueling social media platforms optimized for outrage, the whole social fabric is different. You're less distracted. People read more. That machine that turns every little disagreement into a full-blown culture war, it's just not running on overdrive. But before we romanticize this world of fiscal discipline, we have to look at its dark side, because it is incredibly harsh. It's unforgiving. See, in this world, when recessions hit, they're called deflationary crashes, and they are merciless. There are no government bailouts, no stimulus checks, banks and businesses fail. Families can lose everything, and there is absolutely no safety net to catch them. The crash of 1994 in this timeline was brutal. We're talking unemployment hitting nearly 15%. And right here, this is the fundamental trade-off, isn't it? Our world chose chronic inflation and government backstops, which created a stronger social safety net. Their world chose a stable currency, but the price for that stability is a much weaker safety net and these savage, unfiltered economic failures. And this might be the deepest tragedy of the gold standard world. Without the ability to run up deficits, a lot of the social programs that lifted millions out of poverty in our timeline, they just don't get funded. It's a system that rewards those who already have capital and brutally punishes those who are just starting out with nothing. So, we're left with two starkly different worlds. Each one has its own virtues, and each has its own sins. There is no easy answer here, no perfect choice. So we have two paths. Our world chose the flexibility of massive debt and a devaluing currency, and we used it to build a stronger safety net. The other world chose the stability of fiscal discipline and a sound currency.
but at the cost of savage recessions and a thinner social fabric. And this brings us to the one haunting question that Nixon's decision left us with, a question economists are still fighting over today. Was the power to create money out of thin air a gift that cushioned society from the worst outcomes? Or was it a slow-motion catastrophe, a deal with the devil whose bill is now finally coming due? The choice was made decades ago, but the debate is far from over. And deep in the vaults at Fort Knox, the gold, it's still there, waiting.